what faces us in the maritime sector. I definitely don't have the stomach or the bravery to be an owner, which is why I'm still a lawyer. But some of these things affect all of us in the maritime sector. One of the main reasons why I joined the sector is because it is international, but that in itself also gives rise to a lot of challenges. Some of these challenges were mentioned already. Let's start with the change in the regulatory environment. Well, in relation to the IMO plans, you've just heard a very good discussion about that. Obviously, environmental issues are not new. I remember about probably 15, 18 years ago, I was at a shipping conference in Shanghai, and at that point, there were already two people from Greenpeace who gave a session on green scrapping. I thought that was very brave of them because you're in a room with owners at the time, primarily worrying about profitability. You're telling me that I need to take my ships a lot further to specific yards so the cost of getting those ships there will cost me more money, and potentially then what those yards will charge me for demolition and scrapping will also be higher. So it's not something new. It's become a lot more real, okay? So in addition to the 2020 timelines that you've already heard about, the IMO itself has ambitions to reduce greenhouse gas emissions by 50% by 2050. Now, it seems a long time away, but these timelines go very quickly, particularly given how long it takes for us and technology to find a way to be able not to just do things, but do things in a way that is cost efficient enough and makes enough commercial and practical sense for the owners and the other parties who need to implement it. So that's something that will have to be dealt with. Separately, on the second topic of green scrapping, again, this is not something that's new. Apart from whatever our friends at Greenpeace had tried to implement in 2003, there were already a convention in place, which then gave rise to what we called the Green Passport, which has now been superseded. Now what we are looking at is the Hong Kong International Convention for Safe and Environmentally Responsible Ship Recycling. Now that is not yet in effect. That will come into effect 24 months from when it is ratified by at least 15 nations. But not all countries are waiting for it to become effective before they actually take steps. So if you look at the European Union, the EU has already specified that really any EU-flagged vessel, new builds, must already have the inventory. So if you are ordering a vessel that will be EU flagged, you already have to bear in mind those regulations and requirements if you're ordering new build ships. So they have to have that inventory make sure that they have that during construction, and they have to be maintained through the life of the ship, all right? Secondly, for EU-flagged ships, so ships that are already on the water by 2020, they also have to have the inventory of hazardous materials on board. Right. Now, how does it apply if you don't own an EU-flagged ship? Many of us are out in Asia. You don't have EU-flagged ships necessarily. But what the EU also says is that if your ships wish to call at any EU port by 2020, you also have to meet the inventory of hazardous materials requirement. So that will have a wide impact regardless of whether or not you own an EU ship. So by doing that, they are trying to sort of basically implement and bring forward basically those standards which the Hong Kong Convention would be introducing, all right? Now, before the convention actually becomes into force, you could just get an IHM certification on your class certificate. Once the convention is in force, then there will be a separate IHM certificate that is available. So in addition to a lot of the stress and the headaches that the shipping industry, particularly the owners, already have, these new requirements add to that, right? It adds to the number of things that you have to look after if you want to continue and be successful in this industry, okay? What are some of the regulatory changes that have come that have already impacted the industry? You may have heard of all the capital adequacy requirements that banks are faced with. And that basically means how much capital reserves must you have in that bank. It changes depending on the type of facility that you're doing. So the capital adequacy requirement, say for what you're dealing with on the shipping side may be different if you're a bank where it's primarily real estate. But those requirements have been there for a while. What you have found over the years is they have got more strict. And as the banks have found themselves in financial difficulty, where the banks have found themselves, incurring massive losses, and they have had trouble or they've had to be bailed out by governments, what that means is that they view lending into the maritime sector, because they don't see maritime sector as a nice risk-free type industry, yeah? It just means that for a number of them, it makes it a lot more expensive for them potentially to lend into the sector, or makes it more difficult for them to get internal approval for loans or facilities to the maritime sector. Now, if that's the case, then clearly that will affect people who need that capital injection in order to be able to not build your business, just to renew your fleet. Even if you just want to keep your fleet the size that it currently is, you will need sources of funding. So anything that affects the people who might be providing you with that funding will affect your business. Again, it's availability and it's also the cost. And so that is something where we're at Basel III, there's already talks about Basel IV. Now, the uncertain political environment is obviously not helpful. And people very often say that it is the uncertainty more than anything else that is bad, because you don't know. If you have no certainty, you cannot really plan. If there's volatility, it makes it very difficult. So we have volatility in the markets, demand, supply, pricing. This just throws in another element of volatility and uncertainty, which makes it difficult for the parties. Now, in terms of political uncertainty, two of the things that I've mentioned there are sanctions and tariffs and trade restrictions. The two big ones that we've dealt with for a while was Iran initially. So if you look at, for example, when it was only the EU, right? So before all of this, and before the relaxation, before the US sanctions set in the first lot, it was just the EU, which were not quite as sort of draconian. There were banks who still said, okay, it's a bit gray. I can still fund maybe a rig that may have some of its equipment coming from, Iran, or, a ship may be calling there, but it's not part of its regular trade. So there were quite a number of banks where they themselves were not sure, can we fund this or not? And the risk for them is that they get, and a lot of banks you've heard, have been slapped with big penalties because of sanction busting, okay? Now, actually, at that point in time, we were dealing with a rig that was potentially earning nothing. They were looking for employment for quite a while. Then the owner came with the possibility that she could have a contract in Iran. So you had some banks who said, listen, fine. Some banks who thought, I'm not quite sure whether technically we're allowed to do it. But at the end of the day, because the sanctions at that point in time were not as tight, people also took a pragmatic view. Either she's earning nothing or she's earning 190,000 a day. Right? If you have no earnings, that's not good for anybody. Right? It only really became a problem when sanctions tightened and she could no longer be insured in the international market apart from China and India in particular. So when it hit the insurance market, then people got really worried because I've got this huge asset that I cannot get insured, or even if they found a P&I club that was going to do it, and there was certainly one that was prepared to do it, you look at what is their reinsurance like, how deep are their pockets? Right? And we were advised, listen, all they need is one incident and basically that wipes them out. So it was at that point that then it was at that point that the problems really happened. Right? And then things improved, and now we've got problems again with the same jurisdiction. Again, all this uncertainty. So just as we were starting to give advice to parties, both in shipping and outside, clients who come to us and say, listen, we're looking at these contracts. We want to be able to take our ships in there. Is it okay or not? We then work with, we've got an Iran sanction group, then this thing happens. We were looking at a series of potential new builds for one of the Iranian shipping companies. Obviously, everything then got put on hold. So all that uncertainty is really unhelpful. We had to do the same analysis with Russia when the Russian sanctions came in. We were even asked about Myanmar, because one of our oil and gas clients were potentially looking at putting an asset in Myanmar, and whether or not any of the people who were with the counterparty were basically, on the blacklist, was it okay for them? So again, if something is set in stone, it may not be favorable, but at least you then can deal with it. You can plan and say, right, that's no longer an option. We're going to have to look at something else. But it's the uncertainty, I think, that creates real problems. And then in particular with the trade tariffs and the trade restrictions, that we are saying all these tit for tat, right, between US and China in particular, that doesn't help. And of course, anything that affects trade will affect various parts of the maritime industry, right? It will affect the parties who would ordinarily like to provide the ships for that trade, the people who ordinarily would like to provide cargoes for that trade, the people who finance. As you know, it is an international industry with so many different interested parties in it that it's very difficult to just say, okay, the impact of it will be limited to one or two parties. Linking into the environmental issue we talked earlier about when we were talking about the IMO 2020 low sulfur regulations, and one alternative of having LNG fuel as a more eco-friendly fuel for the ships, how that would pan out if basically, and I know China is really driving that initiative to increase the use of LNG fuel, but at the same time, if the tariffs do set in and that basically restricts imports from the US, then again, if you look at the balance of where China would have to source its LNG from, that's something that needs to be considered. Again, also, if you look back to the issue of Iran, there is a possibility of a waiver, even come 4th November when the sanctions timeline hits, that there are discussions about maybe a party can be given a waiver if it has been showing that it has genuinely been trying to reduce the oil that it buys from Iran. So there's already talk about, if China has its issues with the US, maybe India, who's also one of the big importers of oil from Iran, maybe as long as it tries to show that it is reducing, but somehow still capitalize on that. So, again, the impact of all these tit-for-tat trade and restrictions cannot be underestimated. And political instability itself obviously causes problems, because for the potential of delays in projects, if we look at places like Indonesia, we've got the elections coming up next year, things are being put on hold. So even if you had a jurisdiction where it's not as politically unstable, but for some countries we know, and 18 months before an election, nothing happens. If the projects don't happen, then all the cargoes that ordinarily would come in for those projects, and then the exports from those projects, again, all that is affected, unfortunately. Now, in terms of the other challenges, the market consolidation, we've seen a lot of market consolidation. I mean, one of the big ones we were involved in was the merger between Hapag-Lloyd and United Arab Shipping Company. And there's talk that there will be a second wave of market consolidation because smaller, independent, weaker companies may not be able to survive on their own. Now, the question then is, for the independent companies who remain, for the smaller organizations that remain, how will that impact them in terms of their ability to access the supplies they need, to access the business for the customers? How is their relative bargaining position impacted if there are one of the smaller players, if there are more and more larger players because of consolidation? So that's something I think that, as it is now, if you look at the shipping market, a lot of things, the face of the shipping market really has changed. Historically, you had a lot of real owner operators, family-run shipping companies. You would have already seen that with the change of the financial markets, and a lot of banks not being able to provide financing for these, that a lot of the owners have had to reach out to people like private equity funds for the funding. Yeah, so it's different when you are a real owner operator and you're borrowing money from a bank. When you've suddenly got a shareholder, a joint venture partner, where really for PE funds the reputation is, it's on to what can make us money now, and can we exit in maybe 2-3 years? The thinking, the agenda, the strategy is very different, and by its nature, it changes the face of the shipping market. And finally, sort of the impact of renewable energy, things like that have an impact. How? A couple of obvious ways that I can think of myself, because renewable energy is a big sector for us as well. One is that the shift towards that renewable power rather than conventional. So then you look at the fuels that are required for the conventional power station, say coal, right? So if there's a focus, a shift from coal-fired power stations to renewable energy, then clearly there is a pressure on the coal industry, and therefore also the carriage of coal will be impacted. But the flip side of that, which can be a real positive, because we do a lot of it, not so much in Asia at the moment, but in Europe, is all those offshore support vessels which are unemployed, and there are many, many of them, unfortunately, still unemployed. What we've seen in Europe is an alternative use for similar offshore support vessels for offshore wind farms. Yeah? Because you've got to be able to install and service those. And just as the type of offshore support vessel that you need is slightly different if your oil and gas field is further and further offshore because it's going deeper and deeper water, as the offshore wind farms are further offshore, again, the specs that you need for the offshore support vessels are different. So those are just some of the examples of, I think, some of the challenges we face. One thing I'll just mention quickly, which has been in the news, is cybersecurity. Unfortunately, we all have to deal with it. We were in the middle of a sale and purchase with Maersk when they got hit. And so that basically delayed the whole sort of transaction, but it's a very real risk, not just for the maritime industry, but for all of us. So on that note, thank you very much.